unpack. As you know, I'm jumping around the Trading in the Zone book. And what I've done is I've gone all the way back to the preface, right? And it's amazing when you get to actually assimilate all of what Mark Douglas talks about in his book. You can go back and read the preface and chapter 1 and all the answers are there. But when you start reading the book, you don't know that they are the answers. And so now I've gone back to the preface. And as Mark says here, as of this writing, I've spent the last 17 years dissecting the psychological dynamics behind trading so that I could develop effective methods for teaching the proper principles of success. And remember, success is twofold. One, the success is the success of dollars, making dollars, which is what we all want to do out of trading. But the other success is a mental success. So performance in terms of mental skills and performance in terms of achieving dollars as well. So two parts to that. What I've discovered is that at the most fundamental level, there is a problem with the way we think. There is something inherent in the way our minds work that doesn't fit very well with the characteristics shown by markets. And that's exactly what we have spoken about in the past. We've spoken about societal paradigm and market paradigm, and people haven't quite got what we're talking about when we say that, but we have to think differently when it comes to the market.
And that's a big challenge for a lot of people, isn't it?
It's a huge challenge. And one of the biggest challenges I think we've spoken about before is that people have to be aware of it. Most people just deny that that is the case, and therefore they never step into a process to go and change the way they think with respect to the market. So the first is awareness, and hopefully in the first 4 sessions that we've gone through, you become abundantly aware, and hopefully we've de-energized some of those beliefs that you may have that are stopping you from being aware and admitting, this is something I've got to do something about. So that awareness is definitely the first step.
So those traders that have confidence in their own trades, who trust themselves to do what needs to be done without hesitation, are the ones who become successful. They no longer fear the erratic behavior of the market.
Should we talk a little bit about the erratic behavior of the market, Dave? Because, and I think this is in the preface of the book, so obviously when people start reading it, they would agree that the market has erratic behavior because and you hear so many people say, well, do you trade the market? No, it's a mug's game. And it's too difficult, and everybody just loses in the market. And the thing that they fear about is this erratic behavior. But is it really erratic?
Well, I guess it's your perception of what's erratic and what's normal in the market. If you don't have any expectations about what describing the market just is, and we all have different personalities, etc., then you would argue that it isn't erratic and it's just kind of normal and it does what it does. But
it's doing what it does, isn't it?
It's doing what it does.
And then we put the definition, if you like, of it being erratic. Whereas if you look through quantum mechanics and other parts of science that we're aware of, is that to a higher order, and this is quantum mechanics, you have to, whatever it is that's getting to the high order, has to go through a period of chaos. It has to go through really breaking down what the lower order is, go through a chaotic phase, go through a stressful phase, if you like, to be able to get to the newer, higher order, which is a better order than the order they were beforehand. And so when people look at down markets and they go, oh, that's stressful. So maybe the market has to go through stress to get successful again, in the same way as we have to do when we go through any learning. It's stressful getting through school. It's stressful getting through university. It's stressful starting a new job. But if we don't go through those stressful periods, we don't grow to get to the next level of where we can get to. So maybe the market's not being erratic. It's just doing what it does, and those down periods that we perceive as being stressful and bad are actually good for what the market needs to get to its higher order. So they no longer fear the erratic behavior of the market.
They learn to focus on the information that helps them to spot the opportunities to make a profit, rather than focusing on the information that reinforces their fears.
And it's the glass half full versus the glass half empty there. So this is all in the preface.
It all boils down to learning to believe that, number one, you don't need to know what's going to happen to make money. I've heard that before.
That's fundamental truth number 2.
And anything can happen.
Fundamental truth number 1.
And every moment is unique.
Fundamental truth number 3. And the 2 that are left out right in the preface, because obviously you've got to deal with things like probabilities, is the discussion about the edge and the random distribution. So let's carry on.
Meaning every edge and outcome is truly a unique experience. The trade either works or it doesn't. In any case, you wait for the next edge to appear and go through the process again and again. Rinse and repeat.
Rinse and repeat, and wait for the next edge. And I think we've made the connection in the last couple of sessions about, certainly we think of an edge in terms of probabilities and win rate and payoff ratio and that sort of thing. But the edge really is also the flow, your chosen flow that you have, the relationship flow that you have with the market. And that can be intraday, it could be day trading, it could be in highly leveraged instruments, whatever it is that you choose your flow to be. But you need to have an edge in that chosen flow, that chosen time frame, that chosen level of leverage, that chosen repeatability. Is it every few minutes? Is it every few days? Is it every few weeks? Edge equals flow. Yeah.
So that process is really about entering the flow and exiting the flow.
And staying in the flow, waiting for the next one, isn't it? Yeah. So even when we are fully invested or we totally divested because the market's going down and our edge has given us exit signals, we're still in the flow waiting for the next edge to present itself. And that's the engagement that we have, just being alert and engaged and waiting for the next edge. Yeah. So fundamental technical analysis, why do people do it?
Well, I think people do it because they try to make some sense of the logic, what the up and down of the markets. They're trying to distill some information and make sense of it in order to make a decision. And
put some order, isn't it? That's what we're trying to do. And when I've done technical analysis before, I've done webinars and stuff on it, we talk about putting all these lines and support and resistance and indicators, because you're trying to make some order of what's going on. But I think sometimes people get confused in that the order I'm trying to put on there is in order to predict what's going to happen. But it's not. It's about really seeing what's happening right now, preparing ourselves to react to what's going to happen in the future, not predict what's going to happen in the future. But nobody can see the right-hand side of the chart. We only can see up to that very last bar, but we can't see beyond the right-hand side of the chart. And this is where we've spoken a bit about breaking that nexus, because James Clear told us in one of the sessions we've already done, is that the moment we have a cue that comes to us from anywhere, from the environment, and we react on that cue and we put something at stake, the moment we do that, we are predicting, because we are predicting rewards. We are looking for anticipating a reward into the future. We're not anticipating a negative thing happening to us. We're anticipating a positive thing happening to us. And that's what we spoke about in the last session, is about breaking that nexus. And we went through the 5 fundamental truths as well. So why do people do fundamental and technical analysis? Are they trying to work out what will happen next in each trade? So if you are doing it, and if you think now that you do any analysis, and even if it's part of your analysis is reading newsletters, going to all the noise brigade and all that sort of thing, just honestly think about why you're doing it. Is it to try and find out what's going to happen in the future with that particular trade? Or are you doing it to work out the probability over a large number of random outcomes, a large number of random events? We suggest to you that it has to be the second, not the first. And that analysis is all about working out, about having an edge to get you into the flow, about working out probabilities, so we can think in probabilities, which is what we're going to talk about in the next session. Yeah. So put meaning into data to try to predict this trade. If that's what we can't be doing, and that's what we got to break the nexus with. And why do we do it? In case it hurts us. We're trying to, our automatic emotional pain avoidance mechanisms are doing that automatically without us even trying. And we've got to break that automatic nexus of trying to protect ourselves and not experience emotional pain. We've got to do the analysis, the process portion of the process plus mindset, for a whole bunch of different reasons.
Yeah. The boy that's been bitten by a dog.
Yeah.
It's funny because you've had dogs for a large part of your life, and I've had dogs as well. But I do remember a time when I was young that I was fearful of dogs, and because they had a lot of energy and they were running around, they were barking, making a lot of noise, very, very young, and I would stand next to my brothers and sisters and hide behind them because I was scared of this dog. And it took me a long time to get used to and become unafraid of dogs. So we often we use the metaphor of a dog being bitten by a dog and that of the market. And Mark talks about this in chapter 5, I think it was, Gary.
Yeah, it is.
The whole perception of the market and what it means to be bitten by a dog.
And it's this is the reason why I said, stop the video if you haven't stopped the recording, if you haven't read chapter 5, because you really do need to read the example. I'm not going to go through the whole thing here. We're not going to go through it, but you need to read through that and then reread it as if, rather than being bitten by a dog, you are actually in drawdown. Your portfolio is in drawdown, or you've just had many consecutive lost trades, but at a point that you are feeling hurt, because obviously emotionally hurt, not physically hurt like being bitten by the dog. And you should do that anyway. Just reread the whole few pages about that scenario and put yourself in that situation as if you are an active investor in the market. And then, Mark makes the point in chapter 5, people see what they've learned to see and everything else is invisible until they learn how to counteract the energy that blocks their awareness of whatever is unlearned and waiting to be discovered. So he's talking about two things over there, is that we'll have things that we've seen will actually block the awareness of what we don't know yet. So even there's new stuff to learn, the stuff that's happened to us, the bad stuff that's happened to us is going to block us learning that. And then obviously you're waiting. So we've got to unlearn some stuff as well. There's some things that we've got there that we've got to unlearn and to be able to see what the opportunities are.
Yeah. So from that point of view, like in terms of with the dog, you've got to unblock that fear, that high energy environment or whatever that's making you feel really scared of dogs. Because if you don't do that, then you may never get to realize that dog is man's best friend.
Correct. So you won't actually engage. You won't go and have a series of experiences with another dog to be able to see what can be discovered about relationships you can have with dogs. So we've got to unlearn the fear to be able to have the experience. And think about that from a market perspective as well.
And why would it be virtually impossible to talk the boy, the trader, the investor, out of his fear?
So do you think words can do it?
Well, it almost needs some inner work, doesn't it? For you to think, well, why am I actually feeling like this in the first instance, and somebody to help perhaps break it down for you.
But you really think words could do it? Do you think somebody could come up with a set of logic that could get the boy to not fear a dog? Do you think stories would do it? Do you think?
Yeah, I think you'd need some stories with it, but I think you'd need some experience with some other dogs as well to see that, oh, there's a dog, but that one's wagging its tail and it's licking the other person's hand.
And I think that's what Mark's getting at. Yeah. It can't be done with words. There's no amount of logic or things that could be said that could get the boy to overcome that fear. He really does need to have a series of experiences that do the exact opposite, so that his brain can have different feelings stored in them about when he has those positive experiences, then that's energy going into the brain and it's reprogramming his brain coming through experiences, not through words. Yeah.
The boy has no idea his fear is self-generated.
So the fear is come from a sample of one, the law of small numbers. Mm-hmm. And it's got this hugely ingrained fear in him. And now when he goes into another environment with a dog, the environment isn't doing anything. It's just the fear that he has, his sense of seeing the dog, he feels fear, right? He needn't even see another dog. He could just have somebody talk about a dog being friendly.
He starts.
And the fear would generate, right? And so the presence of the cause of fears doesn't have to be there to actually feel the fear. It could just be near a dog and still feel the fear if somebody just talks about a dog. And how do we know that? Is horror movies. And you could even not even had a bad experience with, say, a shark, for instance. You are aware that sharks kill people, right? And you could be sitting 10 floors up somewhere and somebody talks about an experience with a shark and you feel fear, even though you've never experienced that yourself, right? In horror movies. So the point there is that this fear is totally self-generated. You're not even in the environment, but your senses even thinking about that can create fear that is self-generated. Okay, and this is the point. I know we're laboring it, but that's the point that Mark's trying to make, is that traders also self-generate fear, and they become thoroughly convinced and completely justify that the fear is not from them, it's the environment causing the fear.
So everybody's been bitten by the market.
Absolutely, by in varying degrees.
Yeah.
Depending on those varying degrees is of absolute dollars, but also percentage terms will determine the fear that we have from going in to possibly have a positive experience in the market.
And that bite is etched with varying degrees of emotional energy or pain into the subconscious mind and stored as structured energy.
So hopefully, we're getting the point here that any fears we have about the market, they're going to certainly be etched in our minds. And depending on how bad those experiences are, the fear could be greater than somebody else's. But the point is that the fear is self-generated. It's not the mark. The market's not coming and biting you. The market, you're just looking at an inanimate object, if you like, and you are feeling stuff by looking at the market and perceiving what may or may not happen.
What you will experience is commonly referred to as an illusion. In a state of illusion, you are neither objective, open to opinion, influenced by internal, external noise, nor connected to the now moment opportunity flow.
And it's an illusion because it's only happening in our minds. It's not happening in the real environment. The real environment is offering an endless flow of opportunities, endless stream of opportunities. And what is stored in us, the self-generated stuff, is causing this illusion, and therefore we're not seeing what's really happening. So it's that perceptual blindness.
Instead, you become susceptible to committing all the typical trading errors,
which you went through just there before we went into the slide. But Mark lists these, and there's a whole bunch, and you'll be able to relate to these. And all of these could be positioned or said in a different way.
Yeah. So hesitating, jumping the gun, not predefining your risk, defining your risk but refusing to take the loss and letting the trade turn into a bigger loser.
Compounding.
Yep. Getting out of a winning trade too soon, not taking any profits out of a winning trade, letting a winning trade turn into a loser, moving a stop closer to your entry point, getting stopped out and watching the market trade back in your favour, or trading too large a position in relationship to your equity.
So the last one is a money management, position sizing. But all of those, how do you know that it's getting out too soon or getting in too late, and all of that? If you've got no criteria that define those, then all of those you can define as an error, because there are no criteria, there are no rules to define that now's the time to get out, and therefore this is big enough in the flow that we are, the edge that we're trading with, and the flow that we want to do in the market. So, and we'll get more into that in a moment, is that how do we turn these from being errors into actually being correct, being right?
One of the primary objectives of this book, that's Trading in the Zone, is to teach you how to take the threat of pain out of market information. It's your own mental framework that determines how you perceive the information, how you feel, and as a result, whether or not you are in the most conducive state of mind to spontaneously enter the flow and take advantage of whatever the market is offering.
So this is the redefining. This is how we're going to redefine your trading activities in a way that really takes away the pain. We're redefining the perception of the pain and the fear.
You must be able to see the market from an objective perspective without distortion.
And an objective is your truth. It becomes your truth. If it's your truth and that truth has an edge and it keeps you in the flow and it delivers what you expect over a large sample by thinking in probabilities, then you don't need to distort it. You don't need to feel the fear.
You must be able to act without resistance or hesitation. I'm going to give you a way to redefine your relationship to the market information so that there will be little or no potential to perceive any of it as threatening. By redefine, I mean to change your perspective, operate out of a mental framework that keeps you focused on the opportunities available instead of tapping into your emotional pain.
This is how we're going to operate. This is obviously all about the skills acquisition plan and the trading exercise. So we can't take away the fact that the market goes down and it goes up. That's the environment. So if we can't change the environment, we've got to change how we see the environment, how we perceive the environment. And that means we have to redefine not only our trading activities, that's the actions, we have to redefine how we think about the market and therefore how we interact with the market.
Learning how to redefine your trading activities in a way that allows you to completely accept the risk is the key to thinking like a successful trader.
And I remember Mark talking about the sessions that I saw him present in the workshop and also discussions we had, is that completely accept the risk. That's not happening at a conscious mind level. It's happening at a subconscious level. And how do we know that your mind is retrained to think of the market in a different way? It's when you get into the risk, what you perceive as the risk situations, like drawdown or many consecutive trades, lost trades, before you are going to act on this next trade, is how are you feeling? How's your body feeling? Do you have the sweaty armpits? There's a physical reaction to this. Is there a feeling of anxiety? Is there a feeling of any other emotions? This is why we talk about in the journal. Spoke about in the last session that you got to journal this stuff. What are you thinking, feeling, saying, and doing at the time? And you can write down your physical responses. The sweaty armpits. Are you distracted easier when you're about to trade? Are you distracted easily and say, I think I'm going to do this or that or whatever? Are you looking for distractions? Or are you looking for other information to confirm whether you should do this trade or not? Yeah. Now, all of those are indications that you have not completely accepted the risk. Talk about you completely accept the risk. And only then are you thinking like a successful trader. So when you're in drawdown, and we're going to give some examples in a moment, or if you've had many consecutive lost trades, the slightest hesitation about whether you should do the next trade or not. If there is, well, then you haven't completely accepted the risk. And that's why it uses the words without reservation or hesitation.
So learning to accept the risk is a trading skill, the most important skill that you can learn.
And it's a mental skill.
Yep.
It's about how you feel at the time, is the complete acceptance of the risk.
Yet it's rare that developing traders focus any attention or expend any effort to learn it.
And this is on page 10 and chapter 1 of the book. He talks about this. So there is one of the cruxes of the book said right up at the front. And I'm sure when most people read Trading in the Zone, they just flick through chapter 1 and they wanted to get to the meaty stuff. The meaty stuff is right up the front in the preface, and even reading the foreword from, I think it's Tom Hartle. Go read that as well. And you'll see it's the solutions are right up the front of the book. It's just that we skim over them. We don't quite understand what they mean at the time. So that's why we're coming back to some of the stuff that's right up at the front of the book.
The threat of pain generates fear, and fear is the source of 95% of the errors you're likely to make.
And that's not only with respect to trading, it's with respect to just about anything else in life as well. And if you think of some of the sports that some people do, the extreme sports and things like that, it's all about overcoming fear. And if you don't, then the mistakes you make there are going to be physical mistakes, but generated from the mind. And that's tomato aspect kind of mistakes there. We don't have tomato aspect when we're trading, not physically anyway.
Accepting the risk. Accepting the risk means accepting the consequences of your trades without emotional discomfort or fear.
Peaceful. So whatever happens, you're at peace with the outcome.
This means you must learn how to think about trading and your relationship with the markets in such a way that the possibility of being wrong, losing, missing out, or leaving money on the table doesn't cause your mental defense mechanisms to kick in and take you out of the opportunity flow.
And that's one of the cruxes of the book and those are what Mark calls the 4 primal fears. And really every mistake you make could be put into that. So we have to overcome the fears of those four primal things happening. Otherwise, the automatic defense, pain avoidance mechanisms kick in and they take us out of the flow, which is out of executing your edge. So we need to redefine everything, the entire way, the entire relationship that we have with the market and how we act and what we think, feel, say, and do. So how do we do that?
Well, the first stage is the mechanical stage. So in this stage, you, number 1, build the self-trust necessary to operate in an unlimited environment. Number 2, learn to flawlessly execute a trading system. Train your mind to think in probabilities, the 5 fundamental truths. And number 4, create a strong, unshakable belief in your consistency as a trader.
So this is from chapter 11, right towards the end of the book, and we've already been through this slide before. And this is now the connection to why it's got to be mechanical. It can't be subjective or intuitive. It's got to be mechanical, and we'll take you through some. Now, so I'm picking up on flawlessly execute here. So if risks equals mistakes equals pain equals fear, and we called on to learn to flawlessly execute a trading system. And so how do you flawlessly execute?
You do lots of trades over and over again. You do a 25 trades exercise. You learn the system backwards.
And what does flawlessly means? What? Make no mistakes.
Correct.
So you can't make any of those mistakes we put down earlier.
Well, not directly. If we're going to, it's a process, so we're focusing on the process regardless of the outcome.
So is a mistake losing?
I know that could just something that could happen.
Exactly. Okay. So how do you flawlessly execute and make no trading errors or mistakes at all? We'll give the answer in a moment. How do you flawlessly execute and not fear the 4 primary fears of missing out, leaving money on the table, being wrong, and losing? How do you flawlessly execute, but yes, you are losing. Yes, you are not being right. Yes, you are leaving money on the table. Yes, you are missing out. So how do you flawlessly execute and not fear those 4 primary fears? And how do you flawlessly execute and not feel emotional pain that causes the flawed execution? How do we do this?
You need to have a mechanical approach.
And that's really so these are all these errors. I've repeated them over here. So how do you not make any of these errors?
Well, if you have a mechanical approach, then you've got a signal, so you're not going to be hesitating. You've got a signal, so you can't jump the gun until you've got a signal. You know what your risk is going to be on each and every trade as part of the process, and so on and so forth.
Correct. So we've got to redefine what all of these are. They can't just be willy-nilly what fitting into any of the 4 primal fears, because all of these could fit into the 4 primal fears, every single one of them, right? Yeah. So you can't operate where after the fact, and how can you be at peace with any of these things if they all fit into the 4 primal fears? Because you're not going to be at peace. You're going to hate the stuff happening, and they're going to happen. So how do you operate when they are going to happen? You can only do that by redefining the way that you think about them. Yeah. Because the environment, you would, if you don't redefine and completely accept the risk of these happening, then you are going to blame the environment, because the environment's causing this, when actually what's happening is the environment's just doing what it does. And what we are doing is self-generating the fear and the pain and everything that goes into these things. We are self-generating it, not the market doing. The market's just doing what it does, right? So we have to redefine what these are. Otherwise, we are just not going to be able to keep going with this caper. Yeah. Can you flawlessly execute ever-changing criteria?
That would be very difficult to do.
Because the next time you're not going to know what to execute.
Exactly. Okay? Build self-trust in ever-changing criteria.
Well, if you don't know what it's going to be, how can you trust it?
Exactly. Train your mind in an ever-changing criteria. I think that would be very difficult to do. Create unshakable belief in an ever-changing criteria.
Well, what are you going to believe in if they keep changing all the time?
Well, I used to believe that, but it changed. So,
And it's, I think, hopefully, what you're watching this now can just see how silly it is to be able to do the 4 things that Mark Douglas suggests we do to be able to get this mindset we need. If you have got a bunch of subjective criteria, if your criteria are coming from different sources and what the next one's going to be, just makes a total and utter joke of trying to get the mindset that you require to be successful in the market, to be a consistently peaceful, active investor in all market conditions, if your criteria are changing all the time. So how do you make the criteria not change? Well, then you have to define them in a way that Mark said, no wiggle room. They have to be completely unambiguous, they have to be completely objective, which he uses all the time, and they can't be subjective. So we have to redefine what is wrong, what is right, and what is wrong. So your process defines this. And you have to execute your process exactly how it is predefined, and then you can achieve those 4 points. So you can start creating an unshakable belief. You can now actually completely have self-trust in both you and in the market to be able to execute. Otherwise, you're never going to build those things if the criteria keep changing all the time. Yeah. So it has to be predefined. And then you can't predefine random, the point I'm making. You can't predefine random on-the-fly subjective criteria in a process. There's no such process exists on the planet, because that just means you're making it up each time for the next step.
Every time you go along.
So the process has to have predefined stuff, which means it's, and with respect to the way what we call in the market is it's mechanical. It's unambiguous, it's rules-based, it's non-discretionary. All of those things is the only way you're going to be able to go ahead and get what you need to do. And that's why it's mandatory. There's no other way to acquire the skills that are required unless you use a mechanical process to do it, where everything's predefined so you can achieve those 4 things that Mark Douglas spoke about in the first mechanical stage. Right, on to homework.
So homework, read chapter 4 of Trading in the Zone. Consistency and accepting risk is covered in that section.
Okay, so we covered some of that in this session, the accepting risk. So please go and read that. It's not many pages, only 11 pages. So that's revision, if you like, for what we covered today, and it'll obviously be used in future sessions as well. For next session,
to read doing the exercise, so that's read that twice, so 2 times at chapter 11, so pages 199 to 201, so it's only a couple of pages there.
And also to read chapter 6.
Yeah, sorry, okay. Chapter 6, yep.
That's for next session, the market's perspective. But this doing the exercise was also in the last session's homework to read 3 times. Let's go and read that another twice.
Here we go.